Welcome back, traders. It is easy to mark structure on those picture-perfect examples where everything looks clean and smooth. But the real challenge begins when you face a live chart, where the market is messy, noisy, moves up and down, sweeps liquidity, and keeps you guessing. That's exactly what we will tackle today, step by step, using real chart examples. Now let's begin with this chart example. Here, the market moved all the way up to this high and then started a bearish movement. That means the starting point, or the initial point of this entire bearish wave, is this high. This is your first step of structure marking. Identify and mark this as your starting point. After that, look through the entire wave and try to find the first retracement. At first, let's quickly refresh. A retracement is a temporary pullback of the market against the main wave, or you can say, against the main flow of the market. You will find retracements in almost every wave. But the key question is that retracement valid or not valid? Can we mark it as a structure point? This is where you must build your grip and understanding. Before we go deeper into this chart, let's take a quick comparison of different retracement situations. In this chart, we are going to look at 3 examples. Always remember, whenever you see a retracement during a bearish move, stop for a moment and find the last bearish candle before that retracement starts. Then mark its high and low, and then observe what happened next. You see here 2 candles retraced back, but none of these green candles closed above the high of the previous red candle. Although this is technically a retracement, a 2-candle retracement, and you can treat it as a resistance zone, but it's not a structure point, because this retracement is not valid from a structure marking point of view. In this case, you see 4 candles pulling back, but all of these candles are inside the range of the last red candle. So, again, not a valid retracement. Here, the market is moving sideways, basically a range or consolidation phase. Now look at this. This is the last bearish candle before the retracement started. Market's high and low. Let's name this as candle 1. Now look for a retracement. That means check if 1 or more bullish candles have broken the high of the last bearish candle. But in this case, we can see only these 3 wicks, which tells us the price tried to go up but got rejected. Ended up has just a liquidity sweep because there is no bullish candle body close. So the high of this red candle 1, the now be shifted to the highest wick of this range. Right now, the market is moving sideways, forming a range with multiple candles. But this is not a valid retracement from a structure perspective, because the bullish candle body close above the highest point of this range is required. Now remember this rule. Even if the market moves sideways with many candles, or sweeps liquidity again and again, the number of candles doesn't matter. What matters is only the candle body close. That is the only condition we consider when marking structure. In all these 3 examples, yes, these zones can act as support or resistance areas, and we can take trades from them, but these levels are not considered structure points. We will cover support-resistance confluence with structure in upcoming videos. All right, now let's get back to our main chart. Here, we will carefully identify the valid retracement and then mark the structure levels step by step. Because the market is bearish or in a downward direction, find the valid retracement on the bullish side. Pause the video and try to mark the structure level in the whole wave, from top to bottom. This will build your foundation in structure. Practice is the key to mastering structure. That's why I repeat this in my videos. With practice, the upcoming complex internal and external structure will become easy. Let's focus on this area. Here, after the buy-side retracement, this lower low became confirmed. But what about this lower high? Do you know when it becomes confirmed? Only after this shifted low is broken by a bearish candle body close. Now here is the key point. This lowest point, is it confirmed? What should we call this right now? As you can see, the market has started reversing, so this lowest point is simply a low. But the real question is this a confirmed low? When can we call it confirmed? It becomes confirmed only when the latest confirmed lower high is broken to the upside by a bullish candle body close. Now let's recap it by drawing lines on the chart. so you can clearly follow the confirmed structure points. If you have questions, you can ask in comments below, we will reply you. Here, this is called a momentum shift, or CHOCH. We will go into this in detail in the next video. Before we wrap up, if you haven't watched part 1 and part 2 of this structure series, I highly recommend you check them out. We put a lot of hard work into creating this content, so please like the video and subscribe to our channel. See you in the next one.